Hi, my name is Raphael and I work with Beneficial State Bank. Today we are going to be discussing financial institutions. So basically they're divided into two types. So there are more, but two main types are banks and credit unions. Both offer very similar services such as loans, such as checkings and savings accounts, such as online banking. And so let's think about it. So why even open up an account with one of these two types of financial institutions? Well, the things they have in common are the following: because of safety, because of convenience, because of cost, because of security, and because of your financial future. These are all the things that they have in common as it relates to credit unions and banks. So as far as safety goes, well, it's safe from theft, it's safe from loss and fire. Although I know you might be thinking, well, the bank could be robbed or the credit union could be robbed, there could be a fire, right, etc. So that's fine, but that's why we have the FDIC and the NCUA, which is the National Credit Union Administration, and the FDIC, if I didn't say it, is the Federal Deposit Insurance Corporation, and these two entities will insure your money for up to $250,000. So that's one of the other reasons why it's safe. The other thing is that it's because of convenience. When you have an account, it's really easy and quick to get your money. So your money is easily accessible, in other words, and it saves you a lot of money from cashing checks, etc., or having to go to check cashing places or services. And you can also get direct deposit. So that's a great concept. The cost is a lot cheaper too, just because of the fact that I mentioned the check cashing services. Check cashing services, can basically cost you hundreds of dollars a year, cashing your checks, depending on the size of your check. So that's another plus as to why you can open up an account, or should. And the other one is security. So if your deposit accounts are insured for up to $250,000, as I mentioned. What are deposit accounts? Well, they're divided into, for example, checking accounts, savings accounts, and also some certain investment products such as certificates of deposit, money market accounts. So these are reasons why, so far, as to why you should open up an account. Another one is for your financial future. So when we're talking about your financial future, we're talking about maybe saving money in the future for any unexpected expense, for an emergency, also because you can invest your money so that in the future you have access to that money. Whether or not you need it for an emergency or an unexpected expense, well, that's a different story. However, it's there for you in case you need it. So you have that cushion, right? You have that safety net, in other words. And if all else, and if nothing ever fails, and you have all that extra money, right, once you're a senior citizen or what have you, then you have money for retirement, or additional money for retirement, aside from your retirement investments. So it's a win-win situation. So now let's talk about opening an account. What do we have to go through? Well, it's a process called account verification. And in account verification, you're going to provide the simple things that most people would presume you would need. So your name, your address, your date of birth, your social security number, or ITIN, which is an individual taxpayer identification number, your state or government issued ID. So these are basically for verification purposes, so that they know who you are, right? And they want to make sure that it's okay to establish a relationship with you, a banking relationship or a credit union relationship, right, with you. So that's pretty simple. It's pretty straightforward. And so what does that do for me? So what does opening an account do for me? Well, you get financial services that you can take advantage of. So you can get the direct deposit that I mentioned. So you can get your check cashed directly there, and you don't have to worry about cashing your check elsewhere, right? Very convenient. You don't have to move around anywhere. You don't have to drive around. So it's there, and it's safe. Money orders, cashier's checks. If you ever need to pay for something that requires a money order or cashier's check, you can get that at a financial institution as well. And if you have an account with them, most of the time they're free. And you can also even buy checkbooks. I mean, you can get a lot of checkbooks for $17, $18 a year. That's all it would cost you. And you can write your own checks, and it's really convenient as well. You also have online banking, which I love. Online banking allows you to do transfers. It allows you to send money. It allows you to pay for your bills. So it's a great resource. You just need your cell phone or a tablet or another electronic device that is compatible with your online banking. So very convenient, actually kind of fun. And I like transferring money from my checking to my savings account, which is paying myself first every single month. And I also have the recurring payment, so transfer, so that I make sure that I'm paying myself first and I'm looking out for my financial future. And the other really, I think, important service is the ATM access. So you can go to ATMs, or you can go to point of sales terminals, right, where they have the stores where you swipe your card, put the chip in, and you can make your purchases without having to, take all that cash with you. A lot of things can happen, unforeseen circumstances. So, you can lose your wallet, someone can steal it, et cetera, et cetera. So having a debit card, it's a lot safer to pay that way. And if for any reason you do lose your wallet, you can call the financial institution, let them know what happened, and they will block your card so that nobody else uses it. And in the event that somebody already used your card, well, that's also something that is beneficial in the sense that you either don't have to pay at all for any purchases that were made, or you just have to pay a fee, which is still reasonable considering maybe somebody made $500 or $600 from purchases or even more on that card. So you're not really held liable. Obviously, there are rules, that and a certain process to go through that you check with your financial institution to know what that is. And also because of the loans that are services that are provided, loans and investment products, these are great services to have. Some people love to pay things cash. You don't really need a loan. And some people don't really have the money to be able to buy or purchase assets with your cash, right? So a lot of people can save for many, many years and they don't have enough money to maybe purchase a new vehicle. So that's where loans come in, and loans are really important for you to be able to obtain assets where you otherwise would not be able to if you had to pay cash. So, that's great. And, working on your credit score will allow you to get a better APR, which we'll get into in our next topic that we're going to discuss, or our next module, so which will be coming up. And we also have the investment products, which are also great because this is going to allow you to build money. So when you invest money, it means that you have your money in an account, and that money grows because the financial institution pays you to have your money in that account, a certain percentage per year, which is an APY, which is an annual percentage yield. So these are all different topics that we discussed today within one big topic, which is basically financial institutions. And hopefully this was very useful for you. And we will be back with more topics in the future. Thank you very much.